Welcome back. Well, stable for the markets at this point in time, so nothing much to incrementally report about, but except for the bank Nifty, which has picked up marginal amount of pace, so up around 0.3% currently for the bank Nifty. Lot of broader market stocks are buzzing around. So, for example, L&T Infotech, just look at the stock. It's gained around 8% this week. Majority of the gains today reacting to its numbers, so that stock is higher. And we have a couple of other stocks which seem to be buzzing around. So, for example, Loris Laboratories stands out. That stock has gained around 25% this year and has seen a marginal amount of movement today as well. On the back of two AIDS drugs which they got approved yesterday. Bajaj Auto still to come out with its numbers, so do watch out for Bajaj Auto from the Nifty space as well. But good time then to talk about the technicals of the market, considering that the Bank Nifty is now rapidly picking up pace. We have Aditya Agarwal with us. Aditya, hi, welcome to the show. What's your sense? What would you be recommending both on the Nifty as well as in terms of specific stocks?
Good afternoon, Ekta. Thanks for having me on the show. So, talking of Nifty, you mentioned at the start of the show, there's nothing much to mention about Nifty. It's more of a consolidation. On the downside, 9,000 is acting on the upside. 9,000 is acting as a resistance, which the bulls are not able to cross. And on the downside, 8,900 to about 8,850. That is the zone where the markets are finding some support. So it's more of a consolidation that's markets are going through at the moment, and it's more of a lower end of the range where markets are consolidating. So my sense is you can actually see a short covering rally in the coming trading sessions, if not today. And looking at Bank Nifty, it is extremely at oversold levels. But having said that, it needs to trade above 17,800 mark on a sustained basis. If it does so, then there can be a good short covering rally in the Bank Nifty as well. There has been a marked underperformance by the PSU names, so those are also sitting on oversold levels. There can be some bit of a short covering rally in the PSU banks as well. But the important level to watch out for on the Bank Nifty will be around 17,800. If that is breached on the upside, then definitely there can be a easy short covering rally of about 19,000 odd levels as well. Coming to stock-specific ideas, I have a couple of buy recommendations. ITC is one stock which is actually consolidating after a long correction, and now it's making higher highs, higher lows. And stock does look attractive at current levels and can see levels of 182 on the upside. So definitely one should look to go buy on an ITC for a target of 182, keeping a stop loss at 169. The second stock on my radar is Tech Mahindra. The IT space has been doing good for itself. Tech Mahindra hasn't actually been within the IT space, but looking at the chart patterns, it's just on the verge of a breakout from a small consolidation. So at current levels, one can actually go long on Tech Mahindra for a target of 550 on the upside, keeping a stop loss at 505 on the downside.
Okay, those are individual trades. Aditya, thanks very much for joining us and running us through details. Jubilant Foodworks will report numbers today. What should we expect? Our own pizza man is joining us to tell us exactly that. Mangalam.
Jubilant Foodworks is in focus ahead of numbers today. This time around, we're not expecting too much because the company generates 40 to 50% of their revenues from dine-in and 50 to 60% from delivery. Lack of operating leverages will hurt the margins for this company a lot more than other companies. So overall, what we're expecting this time around is a 2% decline in the company's revenue. The number we're looking at is close to 850 odd crores. EBITDA grows just by about 3 odd percent, 153 crores. And this, remember, is despite adjusting for Ind AS 116. Like-to-like EBITDA is likely to see a much bigger dip. Net profit sees an impact of 22%. We are working with a number of close to 58 crores. This compares with a 74 crore sort of number coming in on the base. The net profit decline, however, would be arrested on account of lower tax expense. Same store sales growth. That's the key metric we watch out for. And this time around, there has been a wide range of SSSG decline estimates by analysts, but majority of them are contained between 7 to 8% in terms of a decline for same-store sales growth. Some even expect a low double-digit same-store sales growth decline. The other factors to watch out for: 30 net store additions took place before the lockdown was announced. Gross margins likely to decline on account of higher input prices. And it's important to track the performance of Dunkin' Donuts and Hong's Kitchen. These are likely to drag the EBITDA a little more.
Okay, all right, Mangalam. Thanks very much for that. Well, the stock is managing to hold up ahead of its numbers, but on a week-to-date basis, already Jubilant Foodworks has lost around 8 odd percent. So you need to put that into perspective. Any which way, we'll take a break now, but more on results, more on specific stocks once we're back. Stay tuned.